Equity markets ended the holiday-shortened week on a tepid note as rising bond yields coupled with expected monetary tightening, high crude oil prices, and anxiety ahead of Q4 results back home weighed on the investor sentiment. The BSE, S&P Sensex and the NSE Nifty 50 indices declined nearly 2% in the 3-day trading week, while the Bank Nifty index managed to better the benchmarks with a loss of 0.8%. The Nifty IT index, however, tanked about 3% in the result-heavy week. And as the markets opened today, after a 4-day gap, it will have to factor in a host of developments in the world markets. Besides, it will also react to the earnings reported during the break, including that of Infosys and HDFC Bank. That apart, all eyes will be on WPI-based inflation numbers, which will be released later today. On the earnings front, Mindtree, ACC, L&T Infotech, Tata Elxsi, HCL Technologies, ICICI Lombard, L&T Technology, Nestle, Hindustan Zinc, Tata Metaliks, and ICICI Bank are some of the prominent companies due to announce Q4 results this week. Globally, China's macroeconomic data, developments in the world markets, and the Ukraine war shall be closely tracked. We have Gaurav Dua of Sharekhan with us to give a sneak peek into this week's market moves.
We expect markets to be in a range. They have bounced back smartly from the lows of March, early March, okay, and they are trying to consolidate in a range. And because of the quarterly number results, what we expect that there will be stock specific, volatility. But however, the benchmark indices, I think could sustain the range.
From a sectoral viewpoint, here's how Vinod Nair of Geojit Financial Services expects the market action to pan out.
Will do well because one, the valuation is fair. If you look on a long-term basis, they are trading around the averages. The yield is increasing, basically their income will increase. And now their credit growth is also increasing. So basically there will be multiple growth in the profitability. So banks, all the finance related companies should do well. Similarly, I think some of the sectors were underperforming, like the insurance and all, they were also underperforming. So anything related with the finance like insurance also should do well. And the others, no, it is very difficult to comment now. Maybe these chemicals and all they may be able to do because still they are getting good demand from the outside and they are able to increase the prices of their product. And so the volume impact is likely to be limited because there is a big supply issue in China. So chemicals like that, they will be able to do well. But for the others, like including metals, there is a strong view that maybe this metal oil prices will consolidate over the next quarter. So if that is true, so these sectors will not be able to do well. So it will be a mix. So we will see a transition happening in sector to sector. Maybe money will move out from one sector to another sector. But overall, the outlook for the equity market is getting very mixed now. So a consolidation is possible.
Against this backdrop, technical charts suggest a trading range of 17,150 to 18,000 for the Nifty 50 index, with a support at 17,300 level. For the Sensex, tech charts indicate support at 57,700 and resistance at 59,000.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.